Good morning, everyone. This is Financial Literacy 101. And today we'll be talking about Virgin Galactic Holdings, also known as Virgin Galactic, or with their ticker is SPCE, meaning space. Now, if you guys are not aware that Richard Branson, who is the founder, CEO, owner, all of those great things, he has sold $300 million stake and Virgin Galactic. And I think it's very important that we talk about it because you're trying to figure out this is a stock roughly around $25. Okay, it's around $25.23. And you're trying to figure out, is this a good stock for you to invest in, or should you sell and run for the hills? Now, let's get into the discussion because I think it's very important. Good morning, minor to major. Nice to see you, brother. Now, as I'm looking at Virgin Galactic right now, I want you to look at something very plain and simple for you to see. You see that over the course of the year, that Virgin Galactic has a sort of a rhythm. You see that in the beginning of the year here, they started off around $16 per share. And then slowly but surely, it started to tick up and it peaked, okay, around $33. And then it dipped back down to $23 per share. And right now, listen, we're only at $25 per share. We're only at $25 per share. Then it peaked at $59 per share back in February at a percentage of 226%, almost 227%. It dipped down low to 27, and then it went all the way down to $16 per share back in May. Then once again, almost like it's like everything is being planned 2 or 3 months in between. They reach up to a roughly $56 per share, okay? And then here back in July 8th, it was at $52.69, and now they are down, okay? Now they are down. Now, just looking how this stock has made wave going back and forth over the course of the timeline, it should tell you you should probably wait a couple of days, maybe Monday, and start to buy either a long-term option or buy a cumulative of shares. See, these are the type of stocks that I want you guys to get into because first and foremost, Richard Branson coming out and selling $300 million stake in that particular stock means nothing at all. Let me back up. I don't want to say that it means nothing at all. It's a ploy. It's what these rich people do in order to increase the scarcity of their stock. So I've gave this example before. When what's a good example? I don't know. Now these are Google Buds, right? Now say if there was a million Google Buds out there, right? And that was a lot for Google Buds to have. But take for instance, everybody wanted Google Buds. But now there's only 1,000 in the world left. These will make Google Buds very, very valuable, which will increase the price. But if it's over 1 million of Google Buds, these will just be buying $100, the regular price of what they are. So there's no scarcity. See, it's the same thing that happened during the height of the pandemic, right? When people were looking for napkins and paper towels and baby wipes and toilet paper, right? You either couldn't find it or it was very, very expensive. This is the same thing when it comes to stock investing. The more volume of a stock, the less legally that is actually in value. Excuse me, I'm jumbling my words. Sorry. The more volume in stock doesn't make that stock as valuable as a stock that everybody's buying. Something like when Wall Street Bets was controlling AMC, when Wall Street Bets was controlling at one point in time, believe it or not, Sony, and then you also had on the cryptocurrency side, you had the was it Shih Tzu or Shinu or and also Dogecoin. So anytime you see a billionaire that is a CEO, owner, CFO, part of the hierarchy of executive business, sell a large accumulative amount of shares, this is when you probably wait just a little bit, a day or two, until you see where it starts to drop. And then you're going to start to see it start to tick back up. Let's look into this. Good morning, Carolyn Taylor. Nice to see you here. So when we're looking at this family, we're looking at how this stock peaked again at $59, then dropped all the way down to $16, and again peaked back up to $55. This is what is making these billionaires absolutely rich. Okay. They sell a little bit of their shares, okay, because they have the majority of the shares. That's why they're the CEO and owner. And then they sell them and then they buy them back. They sell them at a high point. Okay. They sell them at a high point. So let me break this down just a little bit better. Okay. If you notice, I'm not at home. So a lot of traveling. I'm up here drinking a Red Bull, which I never really drink. So probably need some Red Bull and some crunk juice. But anyway, it's Friday. But anyway, what these billionaires do, they'll have a large sum of all their stocks, right? And when the stock reaches, as you saw, $59, $55, then all of a sudden they start to sell off their shares. So the stock price plummets, it falls, right? And I had these news stories that's talking about how, like this. I'll show you what I'm talking about, family. Oh, Virgin Galactic falls as billionaire Branson sells stake worth $300 million, but he sold it at the height of the stock. Okay, I'm pretty sure he sold it around $55 a share. Now, granted, I don't know the timeline he sold it, but this is when the news come out. Now, we can't look at when the news come out. Oh no, he sold it at $25 per share. I will have to look at the financials, but more times than not, these billionaires are selling their shares of the stock at a high point. And what does that do to the market? It encourages, it persuades people, it dupes people into selling their shares because they believe that Virgin Galactic or that organization or company may be going under. They have financial issues. They have instability inside the organization. No, this is a money ploy. This is what they do to obtain more capital. This is what they do to attain more cash. Because if they sell their stock at $55 a share, and then the stock plummets down to $25 per share, and then they buy back their shares, you get what I'm saying? They're buying something they sold at a high price, and they're getting it for the low. Okay, take for instance, you just inherently had a bottle of water, right? Someone gave it to you, was left in your family. Just use it for an example. And you convince people that this bottle of water is worth $100, right? So people start to buy your bottle of water for $100. And then the worth of your bottle of water goes up to $200. Then you say, oh, I'm going to sell it. So now your bottle of water you didn't got for free, you increased it 200-fold, and then it sells, and then the stock price or the bottle price drops. And then when it turns down to be $25, guess what you do, family? You buy it at $25, the stock goes right back up, and you do it all over again. Does that make any sense? Tell me if I lost you guys on that, because boom, there it is. There it is. Oh, I made a company public. My stock is worth $16. I start to convince people that my stock is worth a lot of money. Oh, jumped to $59. I started to sell off 1,000, 100,000 shares. Whoop, drop down to $16 again. Then I buy it on the low because I sold it, so I'm making a profit. Then I started to say, hey, we went to space. We're doing what? Space tourism. And then the stock boosters back up to what? $55 a share. And then now what I'm doing, I am now selling 300 million shares of stock in my own company. Y'all got to know the game. This is a game. This is the money game, and these people are winning. That's why you guys have to learn money. Good morning, bro, from Brom. Also, good morning, investing. See, you guys have to understand these examples I'm giving you, because I'm trying to give it to you in the best way I know. I'm not the most intelligent, I'm not the most savvy, but I can definitely see a con job. And a lot of these billionaires, investors, or CEOs who take large stakes, this like the Wall Street Bets group over there in Reddit. The reason why a lot of people have been talking ill about them, especially Wall Street, because the Wall Street Bets groups are individual investors who is playing the game against Wall Street. Wall Street don't like that. Wall Street wants to control that financial and investing market with the backing and support of the federal government. But a couple of guys got to tell them, hey, man, you got a couple of million? Oh, I got a couple of million, man. I just got a couple of 100,000. Well, let's go and control a couple of stocks. Let's go and control Nokia. Let's go and control AMC. Let's go and control GameStop. And that's what these guys have been doing. And so Wall Street don't like that. And if you notice, all these different platforms, WeBull, Robinhood, E-Trade, Fidelity, all these other platforms start to shut down trading on AMC and GameStop by the way of the FDIC and also the FTC, the Federal Trade Commission. That's like, hey, you got to limit these buys because there's limited option trading activity and all these other financial terms they've been using because they started making millions and millions of dollars playing the same game that these CEOs were playing. And they don't like that. Okay. So when you see these things, family, don't let these things scare you. As a matter of fact, I'm going to encourage you guys to wait maybe until Monday, just watch it, Virgin Galactic, and then buy a couple of them, buy 100 of them. Because here's the thing, are you guys aware they just started doing space tourism? Yeah. Let's look at that very quickly. Why in the hell would you sell 300 million stake inside of your company that you just did a couple of test runs of space tourism? Okay. I'm gonna look this up for you guys because I think it's important that you understand the breakdown of this stock. Because Richard Branson has been doing it now. This was quite recently, and I want you to see how they play these games. Now, just take a look at these pictures right here. It's showing you that him and a team went up into outer orbit of space tourism. And here's a depiction of the plane. Okay, don't show me that. They're out in space, and all of a sudden, was it a month after they came back from space? Richard Branson is now going to sell 300 million stake inside of his company. Does that make sense? Does that make sense? He's going to charge people anywhere from $200,000, $250,000 a share. Then all of a sudden he's selling his shares. That's not the way things work. But for you guys who are not familiar with Virgin Galactic, let's get into it. Okay, let's get into it. I really want you guys to see this. So, of course, in the past year, Virgin Galactic has been up 38%. In the past 3 months, Virgin Galactic has been up 55% the past month. They've been down 33% the past week, 24%. And then today, they're down 3%. Okay, because again, the news came out there, Richard Branson sold 300 million in stake. Now, if you guys are unfamiliar with Virgin Galactic, let me enlighten you. Virgin Galactic Holdings is an aerospace and space travel company which engages in the manufacture of advanced air and space vehicles and the provisions of space flight services for private individuals and researchers. It designs spaceships which can fly anyone. Listen, it designs spaceships which can fly anyone to space safely without the need for expertise or exhaustive time-consuming training. Okay, this company was founded back in 2017. The CEO is that guy right there, but we know who the owner is, which is Richard Branson. All right, what else? It says buy at 36.4, hold at 55.5, and sell at 9.1. Okay, and if you notice, you see that the earnings chart here depicted by these green dots, it dropped in F121. That's because they had to use a lot of capital to start doing these space missions. They had to use a lot of their money to use their space mission. So anytime you have more money going out than you have coming in, that will kill your EPS, which is earning per share, which is a sign that your company is operating out of debt or out of profit. Okay, so that's very, very important to note. So Q2, they started to tick up. Then all of a sudden, as in Q2, when this stock started to tick up, Richard Branson sells 200 million shares of his stock. He sells 300 million worth of his stock. Let me get back here, family. Let me show you the story. Here we go. He sells 300 million stake in his particular company. Does that make any sense to you? I'm just asking the question. Now, if you notice me, I've made a couple of money moves here. Not really. I mean, we're only talking about what is maybe $350. Because I'm just watching the stock right now. And if you notice, all of the major stocks that you guys are familiar with, especially the ones I like, Neo and Plug Power, they're down. This will give you an overlook of some other stocks. But let's move on. Now, CNN has a projected amount in the next 12 months of Virgin Galactic to be $51 per share. $51 per share at an increase of 102%. Okay. So right now, I wonder if this projection is going to change with him selling a $300 million stake in this particular stock. It may or may not change. It may stay the same because, again, these are the money moves that billionaires make to increase the volume, which lowers when you increase the volume of a stock, it lowers the value of a stock. Can I say that again? When you increase the volume, okay, the volume of a stock, it decreases the value, which lowers down the stock price. And this is how they make their money. They sell it when the stock is at $50 per share. They sell their shares. The stock price plummets down to 25, and then they buy back at a lower amount. This is basic investing. Buy low, sell high. Buy low, sell high. Let's move on. Now, I'm over here at Yahoo Finance, and I was just looking at some basic financial information here. I see that the midterm, if you notice, was 6 weeks to 9 months. Let me go back here. Let's see what we have in the past year. Give me 1 second. The past year, it had that this stock was up. So that's around June, right? Mid-year. Yeah, so around June, there we go. Around June, it peaked at 50. Excuse me, you can't see that. It peaked around, let's see, $55 per share, $56 per share in June. So that's mid-tier. So Yahoo is right on the money, right? Let's go back to Yahoo. So it said midterm, 6 weeks to 9 months. So we're right in 6 months. Then it says 9 months plus that this stock will go down. But what they're not telling you is when the stock is going to go back up. That makes me go back and look at CNN Business for their forecast. And I'm just looking at this very small depiction that they have. They don't really give you what month or a prediction of what time frame that the stock will go up. They just kind of give you an overall generalization. In the next 12 months, we predict that it's going to go up to $51 per share, which is 102%. Okay. So that's basically what they're saying. But you cannot be an emotional investor, because that's what they're banking on. They understand that majority of investors or people who want to get into investing, that you guys are uninformed, unintelligent, and just don't know any better. So when you are investing your money and you see your stock go up, it's kind of like you're gambling, right? Oh yeah, man, shoot, man, I made about $200 or $300 in the stock market. And then what occurs, that stock price started to drop. So your overall portfolio amount starts to drop. So what do? You start to sell your stocks because you're losing money. And that's what they're banking on. Because when you sell your stock, you increase the volume of that stock. So the stock value goes down. So what they do is they start to buy up all the stock. So when you see that stock ticking up again, what do? You go back and buy that stock again. But this time you buy it at a higher amount than you did before. But if you just would have stayed in the stock, you'd have had 10, 20, 100, 200 shares, and you'd have made really great money. That's why you cannot be emotional. You have to be patient, and you have to do a little bit of research. Don't take you all day. Okay. Or just come to Financial Literacy 101. I'm pretty much doing the research for you guys. So there you have it. Now let's go over to Zacks and see what Zacks is saying. Now, Zacks is another indicator of analysis, and they're saying, hey, sell. I wonder why. Now they're saying the Scal score is F, has an F for the value. We have a D for growth. Can you guys see that? Let me make sure you guys can see that. Yeah. D for growth, F for momentum, and then an overall VGM score of F. Okay. And it's telling you to sell, not a strong sell, but sell. Me personally, family, if I had Virgin Galactic again, I would not sell the stock. I would not sell the stock because everything is telling me that in the next year or 2 years, this stock is going to be worth a lot of money. You don't just come out and state, oh, we're starting space tourism. And then the CEO, or excuse me, the owner of the company just haphazardly sells a $300 million stake inside the company. That makes no financial sense. That makes no financial sense because a lot of you guys probably got burned with AMC and you probably got burned with GameStop. And since I'm on a topic, let's go ahead and visit GameStop. Let's go ahead and visit GameStop. There it is. Let's see what's going on with GameStop. Okay, GameStop is roughly at $160. Let's just see what has. Look at this craziness, family. Look at this craziness with GameStop. Okay, this is where they were getting you guys. Think about this. GameStop, GameStop back in October 2020. I'm just going to keep it here. Even January was worth $18 per share. Okay. So the Wall Street Bets group just picked the stock and they started buying. And this stock shoots up to $347, family. If you would have invested $20 inside of this stock, and then when it shot up, you would have made $327 per share. Can you imagine that? You give somebody $20 and they give you $327 back. That is an astronomical great investment, is it not? So these are things that we need to understand, family. This is how people control the stock market. They go in, they buy a bunch of shares, and then when the share skyrockets because the volume has decreased, which increased the scarcity, which makes the stock more valuable. The stock price goes up. This is basic math. This is basic investing. Okay. Very, very basic. This is very, very basic. Okay. Anything that has a limited order of something, the price of it goes up. Anytime you have an excess of something, like you have way too many for the amount of people who are in the market to buy it, the price drops. Why do you think when you go to a clothing store, right? Let me just give you another good example. When you go to a clothing store, they always have a what? Sales and clearance racks. It's like, okay, we came out with this new line of clothing. So we know women love blouses. You know, men love these type of fabric collar shirts. So we're going to make 5 million. We're going to make 5 million. So during that season, because they need to bring in new designs, new material, new clothing, only 3 million out of the 5 million shirts got sold. So now we have an excess of 2 million. Okay. We have an excess of 2 million shirts. What do we do with these shirts? Well, let's throw them on sale. Let's give them 20% off, 30% off. Okay. Another 100,000 out of the 2 million get sold. Okay. We got to bring in a new line this year, the new season, because those shirts are played out. No one's really buying them no more. They're out of style. So what do they put them at? They put them on a clearance rack. That's why when you go to a clearance rack, you'll see that blue shirt, that green shirt. You'll see small, extra large, extra large, small, medium. You'll see a bunch of them in different colors, in different sizes, because nobody bought them. And that's why it's so cheap. That's the same idea. That's the same correlation and analogy I'm trying to give you when it comes to stocks. Okay. When stocks are very, very low and people start to buy them, just like with NEO, I told you, NEO was going to be very, very valuable. I told people about NEO a couple of years ago at $3 a share. And now a lot of people say, well, thank you, Ross, because I made a lot of money off of NEO. Because I try to go and I look for these bangers that may be under $20, $30 per share. But sometimes I do tell people, hey, this stock is $50, but it's going to be $150. Again, it's about volume. It's about scarcity. Okay. And you have to understand some stocks you just got to hold. Like I remember I was given information about Ford. Ford actually proved me wrong in a sense because they were so resistant of coming out inside of the electric vehicle market. And now they said there's no way we can compete with the market. We're going to build a Ford F-150 Lightning, which is an all-electric pickup truck. I said, okay, they're being innovative. But if Ford was just going to stay with gasoline vehicles, Ford would have kept going back and forth between $6 and $10, okay? Which I know a lot of my friends, they actually have Ford. But they weren't really making any money because Ford wasn't making any money moves. So we have to be very cognizant of companies who are not being innovative, okay? Especially like a car company. A car company always have to be innovative, okay? They're in that market space. All right. So I'm going to look at some of your notes here. Excuse me. I'm trying to two things at once, and that's very, very hard for me. Anyway, all right, let's see what you guys have been saying. All right, let's see. Bro says, how much did he hold before he sold? Just clocked in. Good to see you, bro. Good to see you too. Now I was trying to find out how much he actually sold his stock for. I believe I was looking at the note, and I sold $25.09. I think that's absolutely false. Let me try to find this again. Okay, let me try to find this one more time again. I want to see, and that's a very good question, because what I'm talking about is that he played as like a fool. Okay, see, they don't tell you how much he sold his stocks at. They just show you that the company shares were last down at $25.09 in a pre-market trade on Friday. Okay, that's all they tell you. They don't really tell you. Let's see here. Let me blow this up for you. See if I can blow this up. Give me a second. Like right here, it says that the move comes a month after. I told you it was a month after Space Tourism Company completed its first fully crewed test flight into space with Branson on board. The latest share sale leaves Branson with about 46.3 million shares. Okay. Think about what I just said, family. It leaves Branson with about 46.3 million shares worth roughly 1.2 billion as of stock's last closing price. He had in April sold stock worth over 150 million. You see that? He still has 46 million shares of Virgin Galactic. And then back in April, he sold some and he got 150 million. Recently, he sold some and got 300 million. But he still has 46 million shares. Again, I'm a person who just loves some basic research. I'm not doing nothing, sinister or highly intelligent. I'm just connecting the dots. So what I'm going to do is I'm going to go back to Virgin Galactic. There's a little bit of investigation work. And I'm going to go back to April, because they said he sold some stocks in April. So it looks like the stock was going down in April. Okay, maybe he made a financial decision. As you can tell here, in February 11th, it was up to $59.41. And then in April, it started to really drop. Okay, it dropped March 8th. Maybe he waited until the stock goes back up a little bit before it plunged. Okay, it plunged. But I don't know. See, again, family, we don't really know. Okay, we don't really know the actual date that he sold it. Okay, because there's no report that comes out and say bro from Brom sold his 3 shares in Tesla. That's word of mouth. He said, yeah, last month I sold so many shares of the company for 150 million. That's word of mouth. He told a reporter that, because essentially your financial information is almost like your medical information. It's protected. Okay, this is what I mean, right? In order for someone to get your credit score, you have to give them essentially your social security number, or they have to run you. You have to give them permission to run you. Like when you go on Credit Karma, you sign up, you get all your information. They're running you by your permission. No one just has, the liberty to go and look at your financial information. The federal government has it because it's on file, just like the hospital has your HIPAA information on file. Nobody just can't get the information. So again, we don't know when he exactly sold it, but I'm just giving you the game because this is how it works. Okay, but let me go back to the report here. Let's read a little bit more about this. It says that Branson's Virgin Investments, one of the biggest shareholders of the space tourism company, has a stake about 22% as of June, according to Refinitiv data. The company's share was last down to $25. Okay, right here, Branson sold more than 10 million shares between August 10th and 12th, according to regulatory filings. Okay, so they don't even know. That's the point. They're just he sold 10 million shares roughly around these dates because they don't know. Okay. Investor says causing a panic. Music Man, thank you. I appreciate the donation, brother. I do appreciate their donation. And believe me, ladies and gentlemen, when you donate to Financial Literacy 101, I buy new equipment all the time. Okay. I buy new equipment all the time. Right now, I'm traveling with my wife. She has this work function. I'm doing all sorts of things, family. I mean, you name it, I'm doing it. I have 2 computers here. This is all my stuff, right? Look at it. I got all that's another computer over there. I'm doing work. I'm drinking water. I'm drinking energy drinks. I got a mouse here, a mouse there, a mouse everywhere. I got 10 phones, or more like Kevin Gates, 2 phones. But I'm putting in the work, family. It don't matter where I'm at. I bring all my stuff with me. I'm putting in the work to give you guys great information. I forgot my second screen. Okay. I forgot my second screen. So I'm going to tell you how committed I am to financial information. I forgot my second screen. And believe me, to do anything without a second screen is very, very difficult when you're trying to give teachings and things. So I don't have an Instacart account, but I just went on the internet. I need to order HDMI cord. And then I put in the Instacart, and Instacart came with an HDMI cord. And now I'm using a TV as my second screen right here in the hotel room. Oh, yeah. I can't work with one screen. I'm using TVs and all sorts of things. But family, if I were you, I would definitely probably wait till Monday just to see where this Virgin Galactic stock goes. And I will absolutely invest. Okay. But again, I don't want you to have a short timers mindset. We're talking about long-term investment. See, when you're building, Rome wasn't built in a day. I know you heard that terminology. Success is not built in a day. Financial wealth is not built in a day. Generational wealth is not built in a day. It takes time. I want you to look at all the people that you favor, and I want you to look at their success. Then I want you to follow the history of them building up their success. See, take for someone that everybody knows, like Kevin Hart. Kevin Hart was doing comedy when he was 17, 8, I think 16, 18, 19. Now he's 40 or late 30s, early 40s. Now he's a 100 millionaire. Okay, he's definitely a millionaire. But it took time. He had to work on his craft. He had to get better. He had to get opportunities. And this is when you come to investing. This is when you come to entrepreneurship. This is how it happens over the course of time. When you're looking at all of these entertainers, when you're looking at all these magicians and rappers and professional athletes, they have a skill that the market wants. But for the majority of ordinary people, we have to grind. We have to work hard. We have to build success. Okay. You have to make the right financial decisions with your dollar. And if you're not paying yourself first, if you're not saving with an emergency fund, and if you're not investing, then you're just playing around. You're not even serious about life. Because the one thing I realized growing up in Southeast DC, when I became conscious of my finances, I realized that most of the people that I grew up with, I'm talking about generation baby boomers, or forgot the generation right before my generation, like my mom, my aunts and uncles, they're going to work till the day they die. They're going to work until the day that they die, because they had no sense of saving. They had no information of investing, because that wasn't infused, that wasn't taught, that wasn't nurtured inside of them. So they didn't do that inside of Generation X. And then now we're having millennial babies and sometimes Generation Z babies, and we're not doing the same for them. You have to teach them. Just don't tell your baby, hey, yeah, just save your money. Okay. I've been told that so many times. Just save your money. Save my money for what? What am I saving my money for? So you can have money. Okay. What we need to teach our kids, what we need to teach our family, what we need to teach our friends is to not only save and invest money, but how to multiply it to live a better life than you've ever lived before. So the difference between staying at the Hilton and staying at the Travel Lodge, there's a very large difference in that, because I stayed at the Travel Lodge. I'd rather stay at the Hilton. I'm just saying. I think the Travel Lodge internet, free Wi-Fi, was these little gerbils running around. I'm just kidding. It wasn't. But this was like about 15 years ago. The last time I stayed at the Travel Lodge, Days Inn, a motel, the Motel 8. I couldn't bear stay at one of them places. And it's not because I'm bougie. It's because I can afford better. So when you start to build the building block of success, not only can you afford better, it becomes your lifestyle. It becomes your lifestyle. You get what I'm trying to say? Because that's the whole point of doing better and building your success and your wealth together, right? Being successful should lead to wealth. Okay. Being successful should lead to wealth. That way you can elevate your current status of living. That's what it's about. And then doing better for your lineage, doing better for your children. Okay. And I don't care how old your kids are. I don't care if they're 20. If you can leave them something better than you could, then do so. Okay. But anyway, I'm off of my little soapbox here. But you guys have a great and wonderful day. I think that I'm gonna be on a little bit later. But if you guys haven't been watching my checkers, not chess videos, I think that I did a really good job of explaining why checkers is a more advanced and strategizing game than chess. You guys have a great and wonderful day and check out them videos. Learn money and be inspired. I'm out.